Today we are going to talk about the insurance law. After the pandemic, insurance has become a very important consideration in our lives. In a world full of risk and also uncertainty, insurance has become an invaluable tool to protect ourselves, our families, and also our assets. Therefore, now we will see the world of insurance. Insurance is defined as a contract between two parties, namely the insurer and also the policyholder. It is not just a financial product, but it is a very powerful tool to protect our life and asset from unexpected financial risks. However, when claims are filed, we are often faced with a complex and also confusing cases. Therefore, a solid understanding of insurance law is essential. Today, we will going to examine an interesting insurance case and provide an insight into how insurance law can be applied in the given scenario. Together, we will going to explore the practical steps we can take to protect ourselves and fight for our rights in the insurance claim. Let's start from the basic legislation. The legal basis for insurance in Indonesia encompasses a range of law, regulation, and also supervisory framework that govern the establishment, operation, and also regulation of insurance companies and the insurance industry as a whole. Some key legal foundations include: the first one is the insurance law. Indonesia has a specific legislation that regulates insurance activity. Law number 40 of 2014 concerning insurance is a comprehensive law that outlines the legal framework for insurance business activities, including licensing requirements, operational guidelines, and also consumer protection provisions. The second one is the Financial Services Authority or OJK. For the regulation, the OJK or Otoritas Jasa Keuangan is the regulatory authority responsible for overseeing the financial services sector in Indonesia, including the insurance. The OJK issues regulations, circular, and also guidelines that govern various aspects of insurance operation, such as licensing, solvency requirement, and also corporate governance. Also, the market conduct. One is the Civil Code. Certain provisions of the Indonesian Civil Code or Kitab Undang-Undang Hukum Perdata are relevant to insurance contract and agreements. This provision establish general principle of contract law, including the formation, interpretation, and also enforcement of insurance contract, as well as the principle of indemnity and good faith. The first one is the Commercial Code. The Indonesian Commercial Code or Kitab Undang-Undang Hukum Dagang contains provision related to commercial activities, including insurance. The fifth one is the corporate law. General corporate law and also regulation in Indonesia, such as the company law, apply to insurance companies and their corporate governance structure and management. Moving on to the objective of insurance law. The first one is regulating the relationship between the insurers, insured parties, and also the policyholders to ensure fairness in insurance transactions. The second one is protecting the interests of all the parties involved in the insurance transaction. The third one is ensures the security in the insurance industry. The fourth one is to promote the stability of the financial system by regulating the insurance practice and also procedures. The fifth one is to regulate premium rates, coverage, and also claims in a fair and also reasonable manners for all the involved parties. The sixth one is provide a clear legal framework for resolving disputes that may arise in the context of insurance. Next one is encourage the transparency and also accountability in insurance company operation. And the last one is to ensure that the policyholders receive the promised benefit in accordance with the agreed upon policy terms. Next is the insurance principle. The first one is principle of indemnity. The main objective of insurance agreement is to provide the compensation to the insured party by the insurance, ensuring that the insured financial position is not improved post-compensation. The second one is the principle of insurable interest. Emphasize that the insured must have a direct involvement with the potential losses, ensuring their significant involvement with the consequences of uncertain events. The third one is the principle of honesty. It's essential for every agreement, requiring all parties to act honestly and in good faith. Failure to do so may result in defects in the agreement, and the law does not protect parties who act in a bad faith. The first one is the principle of subrogation. Allow insurance who pay the loss to have the same rights as the insured toward third parties regarding the loss. Moving on to the principle of agreement. In Indonesia, the principle governing agreement in insurance include: the first one is the freedom of contract. Parties have the freedom to enter into the insurance agreement, determining term and also condition according to their preferences and need, as long as they comply with statutory regulation. The second one is the consensualism principle. Insurance agreements are consensual, meaning both parties must agree to the term and condition for the contract to be binding. The third one is Batasan Servanda principle. Agreements made by the parties are binding and must be upheld. This principle ensured that legally made insurance agreements are enforceable and cannot be interfered by external parties. The fourth one is the principle of good faith. Insurance agreement must be implemented in good faith, with both parties acting honestly and also fairly in fulfilling their obligation. This principle promotes trust and also integrity in insurance transactions. The fifth one is the principle of personality. Insurance agreements only bind the parties who enter into them. Third parties are not bound by the agreement unless specifically stipulated or regulated by the law. This principle provide a framework for the formation and implementation of insurance agreement in Indonesia, ensuring fairness, transparency, and legal enforceability in the insurance industry.
Insurance Constitution. The Insurance Law Number 40 of 2014 in Indonesian governs the insurance industry in the country. First is natures of insurance. Insurance is an agreement between the insurance company and policy holders. Policy holders pay premium to insurance company who provide compensation for losses, damage, cost, or legal responsibility to policy holder or third party. Second is type of insurance company. There are various types of insurance company, including general insurance, life insurance, reinsurance, Sharia compliance insurance, and others. Each type has limitations on the type of business they can conduct. Third is ownership restriction. Insurance company in Indonesia must be owned by Indonesian citizens or entities wholly owned by Indonesian citizens. Foreign ownership is allowed, but with restriction, usually through transaction on the stock exchange. For a business permit requirement, any entities conducting insurance business must obtain a business permit from the Financial Service Authority or OJK. These permits requirements compliance with various requirements related to business organizational structure, capital, and more. 5 is approval business. The OJK must approve or reject insurance company license application within 13 days of receiving a complete application. If rejected, the OJK must provide clear reason in writing. 6 is branch office reporting. Insurance company must report the opening of any branch office to the OJK. Branch office must comply with requirements set by the OJK, including decision making on coverage and claim. 7 is responsibility of insurance company. Insurance company are full responsibility for each office they own, manage, or use their name. 8 is compliance with Sharia principle. There is an emphasis on compliance with Sharia principle in certain type of insurance companies such as Islamic General Insurance and Sharia Life Insurance. Number 9 is involvement of others entity. The insurance industry involves others entities such as insurance brokers, reinsurance brokerage company, and insurance loss assessment company. 10 is business operator and firm. Insurance business operator can take various forms, including limited liabilities company, cooperative, or existing business at the time the law was passed. 11 is supervisions and reporting. Insurance company must adhere to supervisions and reporting requirements set by the OJK. 12 is risk management and product. Insurance company must demonstrate feasibility in their risk management system and the product they offer to the market. This ensures the stability and sustainability of the operation. Certainly, here are some steps that individuals can take to protect themselves and assert their right in insurance claim. First is understand your policy. Familiarize yourself with the terms and conditions of your insurance policy. Know what is covered, what is excluded, and any limit or conditions that apply to your coverage. Second is document everything. Keep true record of all communication with your insurance company, including email, letters, and phone calls. Third is report promptly. Report any incident or claim to your insurance company as soon as possible. 4 is be truthful and accurate. Provide truthful and accurate information to your insurance company when filing a claim. 5 is follow procedure. Follow the claim process outlined by your insurance company. Provide any request documentations or information promptly to avoid delay in processing your claim. Number 6 is review any settlements offered from your insurance company carefully. Number 7, seek legal advice if it's necessary. If you encounter difficulties in resolving your claim with the insurance company or believe your rights are being violated, consider seeking legal advice from a qualified attorney specializing in insurance law. 8 is file complaint if needed. If you believe your insurance company is acting unfairly or in bad faith, you can file a complaint with the appropriate regulated authority or consumer protection agency. Number 9 is keep record any expenses that related to the incident or claim, including medical bills, repair costs, and living expenses. Lastly, number 10 is be persistent in asserting your rights and seeking for a fair resolution. Criminal provision, illegal insurance business activity, punishment up to 15 years imprisonment and a fine of up to 200 billion rupiah for carrying out insurance, Sharia insurance, reinsurance or Sharia reinsurance business without a license. Punishment up to 10 years imprisonment and a fine of up to 3 billion rupiah for engaging in insurance brokerage or reinsurance brokerage without license. Punishment up to 3 years imprisonment and a fine of up to 1 billion rupiah for conducting insurance rules appraisal business without proper license. Number 2, false reporting and information. Punishment up to 5 years and a fine of up to 10 billion rupiah for providing untrue, false or misleading report data or document to the Financial Service Authority. Punishment up to 5 years imprisonment and a fine of up to 20 billion rupiah for deliberately providing false information to interest party. 3. Misleading policyholder and insured party. Punishment up to 5 years imprisonment and a fine of up to 5 billion rupiah for failure to provide accurate information to policyholder, insured individuals or participants. 4. Embezzlement and asset misuse. Punishment up to 5 years and a fine of up to 5 billion rupiah for embezzlement at premium and contributions. Punishment up to 8 years imprisonment and a fine of up to 50 billion rupiah for misusing company asset without right. 5 is sanctions of business activity. Punishment up to 5 years imprisonment and a fine of up to 15 billion rupiah for signing a new policy while subject to business activities restriction. 6. Confidentiality breach. Punishment up to 5 years imprisonment and a fine of up to 20 billion rupiah for unauthorized disclosure of confidential information by individuals appointed or assigned by the Financial Service Authority. Lastly, number 7, corporate penalties. Corporations can face a maximum fine of 600 billion rupiah.
This example that we will take is the Wana Arta case. This company was recorded having failed to pay up 15 trillion rupiah so that the authorities Financial Services or OJK revoked Wana Arta Life business license. Sanctions imposed on they are due to violations of the minimum solvency level, adequacy ratio, minimum investment, and minimum equity, which is not in accordance with the provisions applies in the insurance sector. Let's discuss the case. Wana Arta Life, a name that is now associated with serious problems in the insurance industry. PT Asuransi Jiwa Adi Sarana Wana Arta or Wana Arta Life has recorded a payment default up to 15 trillion rupiah, causing the Financial Services Authority or OJK to revoke its business license as a life insurance company. The impact is not only on business permits being revoked, but also on restrictive measures business activities or PKU that apply to Wana Arta Life. Shareholders, directors, board commissioners, and Wana Arta Life employees are prohibited from taking actions that could reduce assets or reduce the value of company assets. Currently, a liquidation team has been formed based on circular shareholder decision majority. However, the focus is not only on financial issues but also on cases embezzlement on Wana Arta Life insurance policy involving the majority shareholders, Evelina F. Petruchka, Manfred F. Petruchka, and Rezananta F. Petruchka are now in status suspect and DPO or people wanted list. This case highlights the importance of strict supervisions in the insurance industry and the need for its protections for policyholders and shareholders. Liquidation step and law enforcement is a critical step in handling situations like this for the sake of justice for all parties involved. How to handling cases like this requires a coordinated and firm approach from various groups related parties, including supervisory authorities, liquidation team, and law enforcement agencies. Following are several steps that can be taken to handle the Wana Arta Life case. First, supervisions and assessment. OJK and other supervisory institutions need to continue to monitor the financial situations and Wana Arta Life operations and ensure the steps taken are in accordance with rule of law. Second, liquidation process. The liquidation team that has been formed must manage the liquidation process efficiently and transparent by identifying and resolving company obligations with as fairly as possible towards creditors, policyholders, and other related parties. Third, law enforcement. Law enforcement must be conduct an in-depth investigations regarding suspected embezzlement Wana Arta Life insurance policy involving the majority shareholders. Action strict law must be taken against those who are proven to be involved. Fourth, consumer protections. It is important for related parties to provide clear and regular information to policyholders and shareholders regarding the latest developments in this case, as well as providing assistance and direction necessary to protect interests they. Fifth, justice and transparency. During the liquidations and law enforcement process, justice and transparency must be upheld throughout. Relevant parties must provide appropriate and periodic disclosures to all parties concerned regarding the steps taken and their consequences. By taking these steps, it is hoped that the case like this can be handled well and justice can be served for all parties involved, while ensuring protections adequate for policyholders and shareholders. The latest update on Wana Arta Life is that the PT Wana Arta Life is currently undergoing the liquidations process following the revocations of its business license and the formations of a liquidation team. Based on the liquidations team report submitted to the OJK, it is known that the liquidation team has made the first phase payment to policyholders with proportional payments according to applicable regulations.